In this episode of the podcast, we're joined by a special guest, Andrew Burke from Ray White Special Projects.
Andrew is going to give us a snapshot view of what is happening in the land subdivision market as well as the unit market here in Brisbane. There's going to be some incredible insights shared, so you won't want to miss this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome to another episode of the Brisbane Property Podcast with Scott and Melinda Jennison. And we've got a returning guest, so a guest with us today, Andrew Burke from Ray White Special Projects. Welcome back, mate.
Thanks for having me, Scott and Melinda, once again. Great to see your business going so well.
Thanks for coming back and joining us once again on the podcast. Now, it's been quite a while, I believe, for those people that are regulars on the podcast. You'll have to rewind back to episode 192, and that was back in January 2024. We invited Andrew onto the podcast at that time to give us an update of what's happening in the development space. Andrew works with Ray White Special Projects. He's going to provide another update today because obviously, things have moved again in the last 18 months or so. So we're going to give you an update in terms of what's happening in the greenfield land space, multi-residential unit space, and a few other areas just to help you understand how that area has been tracking over time.
It's always interesting, Andrew. I do like chatting because you give us a bit of a we work a lot in established properties, and when we chat to you, you help us understand and our listeners understand what's coming to the market and what's happening on that space. So it's always interesting to see what's coming along because people do ask us, where's all these properties coming from and what are we going to be able to buy in the future because they need to keep on making properties as well.
Yeah, it's interesting. I know that we've got this housing accord. The federal government's got all of these plans in place to build so many new dwellings in the foreseeable future. But the reality is what you might be seeing on the ground could tell a very different story. So let's unpack all of that today and more.
Let's jump into some land subdivision. What's happening on that side of things, huh?
Well, I think when I was here 18 months ago, I would have said it's probably the hottest part of the market. So just go back a bit for the listeners. Ray White Special Projects, we do two things. So we specialise in selling residential development sites, and we also sell quite a lot of residential unit blocks, so the entire block. So unlike some of the other agents who know every nook and cranny of their area, we specialise, I suppose, in an asset class. And you're right, what you said earlier, we're closer to that supply side of knowing what's happening. So in answer to your question about land is the most constrained, the tightest supply, and hence is also the hottest part of the market. So what's happened since then is that it continues to get even stronger. So we're talking about large, what we'd call in globo land. So picture, listeners, large parcels of land that you go past one day and then you come past 2 years later and you see 200 lots in a thriving community. All with its own parks and waterways and general facilities. But so the demand from developers for that land it could not be hotter. And we're talking anywhere from a splitter block up to major large-scale planned communities of, a couple of thousand lots. And the reason for that is that the population continues to increase. And what this is based on is called the South East Queensland Regional Footprint, that document that stipulates where we can build houses. And whilst it's, I think when it was about 18 months, 2 years ago, they adjusted it, it was a very minor adjustment. There weren't new swathes of land being approved. So, it continues to see strong buyer depth in that market, but easy sites are done.
So it's only the complex sites that are left. And
complex sites, yeah.
And it's interesting because obviously we can't create more land, so we are constrained by what is available and not... people might look at Google Maps at the aerial photography, for example, and say, well, hey, there's plenty of land in South East Queensland. Why can't we just start building more housing here or here? What are some of the constraints that exist on some of this land that we might see? Is it zoning constraints? Is it services? What's causing?
That's so zoning, because it's easy just to change the zoning by the governments or councils. But you're dead right. If you unpack it, and it's really got a lot to do with the non-sexy issues of stormwater and sewer. And just on that, sometimes a landowner will have some acreage and say, I want to know what this is worth as a development site. And people hate a real estate agent avoiding the question, but sometimes I just going, I could be out by 30% unless I know something like the sewer has capacity. So it's those issues. One that's becoming quite prevalent is these environmental overlays, where the council or even the federal government will put overlays on it saying, yes, that zone that you can do that, assuming that you comply with these environmental constraints.
And so some of those overlays, Andrew, would be, for example, habitats where perhaps native animals live, or there's fauna that's protected on those sites. Exactly. So they're the sorts of things you're talking about.
Exactly, and quite often just vegetation. But look, no one wants unnecessary damage to the environment, but sometimes it's a very broad brush instrument. The issue is that they put those overlays over the whole broad region without ground testing them, and then it's up to the developer to prove that it's wrong. So I've had instances in the past where I've going, well, you can't develop that, and the developer's brought in his own arborist and gone, that is a weed. That tree is actually a weed. There's nothing amazing about that. So, but the problem is to get an arborist in, if you don't even know you're buying the site, costs a lot of money. So it does restrict it.
I know we spoke, whether it was the last podcast or the one before, I'm not sure, Andrew. And one of the things which we were really aware of then was the cost. So how is that side of things now for developers when we talk about constraints and you talk about zoning and environmental side of things? What about when it comes to the construction side of it? Because people think construction and they think houses and units and dwellings. They don't think what's under the ground. How is that?
Those are what we're referring to civil construction. Look, that seems to have stabilised since I've been here, but there was a dramatic escalation. We used to sort of work on a rule of thumb for every lot that was developed. When I say a lot, picture 400 square metres or even smaller these days, maybe 300. We used to sort of work on it would cost a developer about $100,000 to develop it, and people are gobsmacked by that. But the sewer, the infrastructure charges, the marketing, the civils is the big one. It's gone up, a huge amount. It seems to have stabilised, but look, it's still a big chunk because I think it's gone from 100 to about 170 or something. Seems to be the rule of thumb now.
And of course, all of that gets charged on to the end buyer.
Charged on, and so and that cost is the same whether you're in blue chip Hamilton or you're out at Whoop Whoop. So
Let's talk about Whoop Whoop. Some of these emerging growth corridors. I know people may not know where Whoop Whoop is in South East Queensland, but there are growth corridors. There are locations where we are seeing some land subdivisions occurring. Can you talk us through where these locations are? Where is this developable land in South East Queensland?
Yeah, so the South East Queensland market, they sort of divide it up into several corridors, and a lot of those are quite constrained. That eastern side out near Redlands, that where you've got the water one side, so you can't go too far, and then they have quite a lot of chicken factories down there, and they need some sort of buffer. So there's not a huge amount down there. There's pockets. That Brisbane to the Gold Coast, look, that continues to thrive, but there's not a lot left there. So the one that's really going well at the moment is, getting a lot of interest is what we're calling Caboolture West, or Warrabah, I think it's now renamed. And that's finally starting to come online after a long run up, simply because there's a bit of priority unpacking those infrastructure challenges of sewer, water, all that sort of thing. So I think laws are being freed up so developers can make their projects viable. So that is the main one. Caboolture West seems to be the flavour of the month. But if we look a bit further afield, areas which would have been really sort of secondary and third-rate locations have had a good run in the last 18 months since I've been here. I'm talking about Bow Desert, Fernvale. Areas which weren't on developers' radars and now are getting a real strong amount of interest. Simply it's an affordability issue and people are going a bit further out. And regional is one as well. So there's a world outside South East Queensland, and regional is something that is interesting, a bit of a mixed bag, but a couple of places that stand out would be Bundaberg. Toowoomba is off the charts hot. It's a good reason why, a couple of reasons why. And Bundaberg's actually showing a bit of, Bundaberg, Toowoomba and Gympie. Gympie,
So when we talk about some of these regional areas, you're talking about the demand for land subdivision sites, not necessarily the demand for established dwellings. So you've mentioned that a lot of that is driven by affordability. Is it costing developers less to bring that land to the market, or is there more demand for the end product, or is it more so just the fact that the land that is there is more shovel ready, it's more able to be developed, and therefore that's where developers are shifting to?
Oh, it might be just you can buy the land a lot cheaper in Bundaberg than you can in Ripley, you know. And it might be less fragmented too. Fragmenting meaning you might be able to buy a much larger parcel rather than having put together 5 or 6 owners. But I mean, Toowoomba's got a lot going for it there. It's got a diverse economy. You've got government, you've got education, it acts as a bit of a headquarters for rural, a headquarters for mining, and it is getting some very strong revenues. And I think people want to think differently. Like Gympie is a good example. The revenues to buy a block of land in Gympie about a couple of years ago, I'm talking like 4 years, maybe 3 or 4 years ago, it was about 135,000 to buy a block of dirt out of a new estate. Now it's pretty much at 300,000.
Wow. Not bad land appreciation.
I have a developer who I sold something to when the market was dead. He paid just under 500,000. He's got several $1 million reselling it. Right. Wow. Simply because it's 45 minutes to Noosa. And it's all those people who live in the Sunshine Coast, where they can't all afford to be in Hastings Street.
We all wish we could afford to be in Hastings Street. Can I ask just more specifically about Brisbane City Council region? Is there any land left?
Oh, hardly any. Let's just say none.
So
if they are, it must be heavily constrained with environmental or infrastructure issues or...
When we talk about Moreton Bay, we've already spoken about Caboolture West, which is to the far northern segment of the Moreton Bay region. Is there any other land in that sort of council region?
Oh, look, yeah, there is, but it's the same issue. It's fragmentation and serviceability. And the stuff that, and look, let's be honest, not all sellers are realistic. We'd like to think we really maximise a price and, we give a property a good run and get a premium result for our sellers because they're the ones paying us, but sometimes owners just aren't realistic. And if someone's been knocking on your door every week, 10 real estate agents a week out in these places, it doesn't breed reality for the seller.
And of course, we've seen a lot of newer estates popping up over the last 10 years or so in areas of Ipswich and also in areas of Logan. Is that likely to continue? Is there still land in those locations?
In that Logan area, it's becoming a bit, it's running out a little bit, but the West is one area that's not constrained because you could start at Redbank Plains and you can go out through Ripley, Deebing Heights, and you can keep going all the way to Arachula or the base of Warwick.
Yes, okay.
So it's not physically constrained. It's just the zoning which will unlock if the demand is there.
Perfect.
And you've had those areas out there like Springfield Lakes. I mean, they're probably a long time ago now.
That's right.
Like. But that area, as you say, it can keep going because it has the land.
That's true. And also, look, we sit here sort of relatively inner city Brisbane. We get a bit too focused on proximity to Brisbane CBD. A lot of those people don't come to the Brisbane CBD.
That's right.
The employment centres are Ipswich or western suburbs, manufacturing. So they're not as far away from employment. I mean, look, employment's everything in these areas.
100%, absolutely. Let's move on to unit development sites. What's happening there? Is momentum building?
There's a slight change. I think when I was here last time, I said pretty clear in that high end, that product that people build for the units above at that higher end, that goes on unabated. So that continues to be very strong. But listeners who were there last time would recall me saying, just be careful when you see those cranes because they're only building one product. It's the high-end stuff. There are no units being built for medium or low price points, and I mean none. So
let's talk about that because when you were last in 18 months ago, we were talking about the price to build these entry-level units, the cost for a developer to acquire the land, construct the building and resell. And at that time, we were saying it was costing developers around $850,000 per unit. What's changed and how has that shifted in the last 18 months?
Yeah, well, I think it's probably best described. If we get a listing and it's for a medium to high-rise, unit site, developers can't make it stack unless they're getting $950,000 minimum per unit.
That's incredible.
So we've had developers say, you could give this land to me for free and I still can't make it work.
Yeah.
Keep in mind, the land's actually a fairly small component of the total cost
because
of a medium to high rise. Yeah. So, I mean, that's a lot, isn't it? So
950.
Yeah, look, it's word on the street, it seems to have stabilised.
Okay.
But there's a real... the only change would be that we're just seeing a few green shoots come through, meaning we've sold a couple of unit sites to people who are going to build to satisfy that sort of medium income area, but look, they're almost always builder developers.
Yeah, okay.
They're not developers. They're builder developers, and some of them might have a different mandate where they're like, I'm just going to hold on to these. I'm not going to sell them down. They've got some lazy capital. They can hold on to these things for a while. But it is a significant difference. So, next time you're driving around, listeners, have a look. Those cranes, guaranteed you they're on the river or they're at New Farm or they're at West End. They're not where they used to be at Chermside, Mount Cravat, Greenslopes, but they are coming back. So it's just that it turns quickly because it's a hard thing for a developer because to get it right, it takes a long time to get a building out of the ground. So if you leave it too late.
And we've seen really strong capital appreciation in the unit market in the last 2 years here in Brisbane. Median values in that segment of the market have just actually surpassed $700,000 for the first time in history. But when we're talking about a cost to bring a unit to the market being, mid nines, 950,000, as opposed to what the median unit value is being around $700,000. There's still a huge gap between established and brand new if you're talking similar product type.
Yeah, well, I was always brought up saying you had to buy houses because of the land appreciates better, but I think you guys have the stats better than anyone. But I think, am I right in saying that existing unit prices have outgrown houses?
For the last 2 years, correct. Yeah.
Yep. But I can't, if nothing is being built, existing units have to go up.
Yeah.
Because it's an affordability thing. People who wanted to live in a house are going to buy a unit.
Well, the only units, as we've talked about, and we've talked about this a fair bit on the podcast, is the only units that they're actually building. And Andrew, you just mentioned that, $925 to build a unit. It's it's a different product that's coming to the market. So it's a completely different product to that affordable unit that people want to get into as they get closer to the city.
The old ones are pretty big too. The old ones are actually more livable.
Yep.
Yeah, buying established and refurbing, perhaps there's something in that. Secrets out. But if you've been a podcast listener for many years here on the Brisbane Property Podcast, that won't be a secret to you, because I know Scott and I have been talking about that segment of the market for a couple of years now, more than a couple of years now, for this simple reason. We are seeing that cost to build, that cost to deliver the final product escalate so rapidly, and there's a huge gap between established and new.
Point on that. Everyone should keep listening, because there's no way it can go down, that construction cost. What's going on in Brisbane, it's impossible that it's going to come down. So prices of existing will have to go up.
Interesting. Townhouse sites, townhouse development sites, how are they looking? What's the pipeline there?
Once again, a bit like that, what I talked about, there's a bit of a green shoots coming through, just starting to change. It's changing a bit more positively with the townhouse sites. They're just hard to get. There's not many of them. A couple of years ago, council cracked down on used to be a lot of sites, about 3,000 square metres, zone emerging community we used to sell, but it's a bit tighter now. The good thing about those townhouse sites, you can stage them.
Yes. Yep. Yeah.
So you can stage them, which means it's less of an impact with your bank and budget and all that sort of thing. So look, it's showing a bit of interest. We're getting a bit of inquiry, but there's just not much out there.
Who's building those again? Are you talking your builder developer?
Yep. Once again, developer. Yeah.
So just for our listeners, when you're a builder and a developer, you've combined basically two margins into one. Is that why they are the ones that are continuing in this area, but you're not necessarily seeing the developer that then goes to pay the builder, and the developer's trying to make their margin whilst the builder's making a separate margin? Is that why we're seeing builder developers sort of succeed in this market?
Exactly. Yep. They don't have to have the development margin. They don't have to have the build margin. They can get away with a bit less.
Merge the two margins into one, which is interesting because, and a lot of that is due to the construction costs escalating, and that's been a result of not only material cost increases but labour cost increases. Off topic, but how do you think that's likely to change in the lead up to the Olympics with all of these infrastructure projects? Obviously, there's going to be competition for construction workers.
Well, it makes sense that it's going to go up, but people closer to in the know tell me it really depends, and maybe the builders who do infrastructure don't necessarily always do
The same sort of townhouse.
They mightn't do like townhouses, or they mightn't do low-rise units. But certainly in the high-rise units, and there must be services, there must be sub-trades, which again are still going to be covered by all sectors. That's going to be competitive.
Yeah, absolutely.
You're tiling a bathroom for a stadium. It's the same person surely tiles a bathroom for a residential unit.
You would have thought so. Yeah.
So it'll go up. But the good news is, it's not all doom and gloom. Revenues are going up.
That's true.
Just when you get in.
That's so true. So true. So get in sooner rather than later. That's what you're saying.
I am. I do. I believe it.
Very good.
Are you seeing many of the unit? I know we talked about a little bit about your established unit complexes or unit blocks, your six packs, those smaller complexes, I guess. Are you seeing much of that coming to the market?
Not a lot. So touched on previously in that we've been selling quite a lot of, and a bit of a specialty of ours, really, existing unit blocks. So think your brick six-pack that your Greeks and Italians built in their day.
Yep.
Not a lot come to the market, but when they go, they are really strong buyer depth.
Yep.
With the exception of the land market, this will be the strongest part of the market. One, for that affordability that we're talking about and lack of existing product, but also there's a reliability of income. Probably one big change that's happened in the last 18 months, probably haven't talked about, is rents would have gone up 35%.
That's true. Yes.
So rents in these unit complexes have gone up 35%. Not only that, ones that, unlike a commercial asset and a same price point, these do get capital growth.
Yes.
So they benefit the same capital growth that the surrounding houses have. So you've got 35% uplift in your rental
income,
and you've got just your straight capital growth has gone up as well.
Yeah, so an overall return.
That. And not only that, a lot of them sometimes are future development sites.
Yes.
We sold a ripper last year, was at Wooloowin. We said, the building inspector came through and I said, you got a few more years? He goes, it's got about 30 because it's built so well.
Yeah.
And look, I think it was zoned 3 or 5 stories, but
yeah, upside huge.
You walk to the train. The council will be far more bullish on those zonings. So I really like those unit blocks as an asset class. The downside is you do cop a pretty tight yield in the short term.
Yes.
You get your rents up, you get it revalued, and you got a future development site. So probably not for someone in the later stages of their investing life, but probably someone in the earlier stages or the middle stages, I reckon.
And they're the ones that the units, as we said earlier, they're a little bit bigger in size. That the way they were built, they're nice and solid. And if you want to hold them for a longer period of time, you could actually go in and just do a quick little kitchen and bathroom, and your cost is not like it is compared to a house.
Exactly.
So you can actually
and you can do it regularly too. So you don't have to kick everyone out. One tenant moves out, you fix up your bathroom. And I think they're a tremendous asset class. One thing you just got to watch with them though is you don't want to be in an area buying them where they are going to throw up towers and towers
around you. Yeah.
When that market does recover.
That's so true. Yeah. Can we talk about our ageing population, Andrew? I mean, we all know that we're getting a larger cohort of, over 60s within our population as a whole. Lend-lease communities, the over 55 sector, what are you seeing trend in that area at the moment in South East Queensland?
Very strong part of the market, Melinda, very strong. So I'm not sure if everyone knows what they are. They're called over 55 resorts, but given I'm 49, that's a little bit
confronting, let's say.
Much for a long term. Look, people wrongly brand them as caravan parks. The model is this, in that you pay the owner of the estate a small amount of money to rent the patch of dirt where your technically mobile park, your mobile caravan is, but it's not. They're quite
homes.
They're quite solid houses, and the beauty is you can pack a much higher density than you could if it was a a townhouse subdivision or an aged care or whatever it is, or sorry, not aged care, retirement. But you have all these community living. There's bowls clubs, there's a pool, there's a bar. It's a real sense of community. So that it's got that benefit of giving another option for seniors. But the main one is it's a really far more affordable option.
Yes, yeah.
And they're not living going up and down stairs or in lifts. They're in a sort of technically detached dwelling. So we are seeing huge growth in that area. And really, with this lack of affordability, we need a different product. And to me, that's a bit of an answer. So I wouldn't be surprised if that becomes more than just an over 55s thing.
It'll be interesting to see if it actually rolls into more mainstream housing in certain areas, especially in some of these areas where there is still available land. It provides potentially a more affordable option for buyers to get into the market.
That's right.
I don't probably like it how you call it the seniors, Andrew, when I am actually over 55 and you put me in that seniors category. But anyway.
Oh, well, that's the reality of age.
There's a couple of dominant players there. Stockland, Avid just bought Living Gems, who have been really big, Mirvac. So it's growing. Yeah. So normally those big chunks of land would be sold for a future subdivision, but these land lease communities can pay a bit more.
I think they're a good thing because it gives people that option to move into something, a bit of a community, and you're not having this big house that you've got to take care of. You've got everything there. It's all low maintenance. People can live.
Travel, but it's really a community. I mean, I think people go and have a look at one. People, you see a Living Gems or a Stockland or Mirvac, go and poke your head in because they're really comfortable.
Yeah. Build to rent. Obviously, this has been big on the government's agenda, but have we actually seen this play out on the ground? What's happening in that space?
Well, I don't know a huge amount about that. How's that an agent just saying I don't know? But my take on it is this. There's a lot of talk for not many things being developed. And even if they are, this housing affordability crisis isn't being solved. Look, it's helpful, but I'd imagine it's a couple of % of the market. It's more sold by the mums and dads investors who owns these things. So it simply can't be any different than this. If a builder developer in Brisbane can't make a unit complex stack up, how does a build to rent
model work?
How does a build to rent model any different? There's a couple of minor differences they have, but the main one is the government throwing incentives at them.
That's right.
And even then, they can't make it work. I think look, I could be wrong, but my take in is a lot of these are owned and retained by large funds, and a lot of these funds like to have funds under management. So maybe they sacrifice a development profit to have funds under management down the track because it's owned by, they're not selling, they're keeping it in-house. Maybe they've got their own manager and maybe they're factoring in their feasibility some quite big appreciation towards the end. Now things will change, and it's not a broad brush. Some are being developed and stacking up, but it's like it's got this catchy title, BTR. But I don't see any units being developed.
It's interesting, isn't it? Because I think the media would have us all believe it's a huge growing segment of the market, but the reality is very much different. And you touched on a really valid point there. The government want us to believe they're doing so much to help the housing crisis, and yet the solution right now is and has always been mum and dad investors, especially in Queensland. Mum and dad investors, that's private investors, still provide the majority, well and truly the majority of rental housing for people that are tenants in the state. So the government provide such a small minority of housing options. So,
And look, if it wants to be sold, and maybe they're doing this, I don't know, because the state government seems to be doing some good things, but you get so much knowledge by talking to a developer. I think developers get bum raps. This white sugar grade, it's garbage. 98% of the developers we come across, they're dealing with tradesmen all day. They start in Humbleback. They're backing themselves. They're employing people, and they have really good solutions. Like you get them a room, say like units, how do you make them more affordable? They go, okay, relax things like car parking or relax your design guidelines so that we don't have to build basement car parking, which is exponentially expensive every basement level you go down. So you can see that now. You'll see on some unit towers, you'll see that first 5 floors, it's sort of covered in greenery. It's a bit odd. Well, you don't realise that's actually car parking the first 5 levels.
They're
the sorts of solutions. You get 10 of Brisbane's smartest developers in a room, put on some booze for them,
They'll come up with
with brilliant ideas.
Yeah.
And I went there once. I had this meeting with a group of them and the Lord Mayor. The Lord Mayor was excellent, actually, just getting really practical advice from them.
That's what we need to see more of, governments consulting with industry to get that real-time knowledge and understanding.
And not the solution, but imagine if you had the developers together and you put these affordable units together, and then you had maybe combine it with something like the way they're building those over 55 complexes where it's smaller and it's more dense. You'd actually create more housing for people as well.
It'd be a solution. I think it's a good idea.
So just generally, broader market observations in the space you're operating in, how would you like to sort of describe that, Andrew?
Broader market observations, but on those sectors we've talked about.
Yeah.
I just can't see it going down. If all the demographics we get at Raywide are correct, it's just the population will continue to increase. It's pretty simple. The population will continue to increase. We only have so much land, so land will keep going strong, and eventually we'll reach a price point in revenues where these units start to stack up, and units and townhouses start to stack up. And I suppose the big thing is it's very frustrating for people to go, geez, I can't believe it's going to go up, but it's not. I can't see how it could possibly go down. Not out at Longreach here. There's only, there's only so much land around.
Yeah, that's so true. Yeah, I think all of that's been extremely valuable information because every part of the market shifts and changes, quite often. And here we've spoken 18 months ago, fast forward to today, and we're starting to see some transitions, but ultimately we still have a problem with they're not creating more land. We a lot of our land is gridlocked because of the inability to develop it for the sake of services or where that land is located, and that's not going to change.
Between Queensland Urban Utilities, the council, and the state government, so that's pretty hard for people. They're never going to agree on anything.
But then at the same time, building up in higher density development because of the construction costs and constraints in that regard, that's become less feasible over time as well. So we're not really seeing a huge volume of land subdivisions, but we're also not seeing a huge volume of higher density dwellings. So ultimately, we're not building for the future.
It just means prices are going up, doesn't
it?
Yeah. So, I mean, I can't even remember what the government says our housing targets are, but us on the ground, and our job is focusing on supply. It's fantasy land. It's simply
fantasy land. Yeah. Wow.
It completely is. So to me, it's just got to be, if your listeners, if you're a investor, keep in mind, there's nothing affordable being built, so get into that second-hand product. And maybe for the developers, it is where's having a real run. And for example, like I don't really know, like a Toowoomba that's having a big run. At some point, it's got to become unaffordable.
Yes.
Just like Sunshine Coast was, and Gympie was dead. Now Gympie is actually getting some strong revenues. So sort of just getting out your radius, what's near these areas that are thriving, like what's near Toowoomba, like is it Warwick, for example, which is only 40 minutes away, which is still really hard to shift product there.
So the big question then, when you talk about the getting into the established market, people are going to ask what's coming to the market, what sort of products, and what's the market look like? Is there going to be that supply of that established, which is always a hard one because you don't really know what's coming along, but I mean, do you see that?
I think you look realistically, where are they going to put units? They're not putting them in Ascot and Hamilton.
That's right.
It's going to be where there's post-war homes and they can knock them down, and they're going to be near train lines. So I'd be less likely to be buying an existing product where they're going to throw up lots of units around you, because those unit towers can flood the market pretty quickly.
So
it
true.
can die off pretty quickly, unlike land.
So true.
So those areas where there's post-war homes and they're presently 3 stories, they're going to be 10 stories, I reckon, for sure.
So think of Brisbane pre-war homes. That's anything built in prior to 1946 that has a character overlay. Think traditional buildings, areas that have a lot of those sorts of homes around. There's some zoning that might show that higher density is permitted, but if there's a character overlay, that property cannot be removed. They're the sorts of areas in terms of establishment.
The old 6-pack or existing units in those traditional suburbs are still around. That's where I'd be hunting.
Generally
There you
pretty
go.
solid.
Tip.
Maybe a few cracks in the brickwork, but they're not going to
Oh,
they're not going to go anywhere.
That's right. So I think it's a positive story. I just think there's frustration that people are saying, I can't believe how much it's going up. I think you've got to accept it's going up and
yes.
be a smug prick later on how much it's gone up after.
Yeah, it's not going to go backwards.
It's not.
No, we know that.
There's no way with construction prices, what's going on in this town and a lack of land. It's only going one way. And it's good for sellers as well.
Yeah.
Well, you've heard it from Andrew, not from us. Andrew, thank you so much for joining us on today's podcast. I'm sure listeners have enjoyed all of the content that you've been able to share, and it's good to get that real on-the-ground insight in terms of what's happening in that development space. So thank you.
Thanks for having me. Congratulations on your business. I'd just like to say, listeners, we deal with a lot of buyers agents, and these are the only people that I trust. They actually have the courage to tell you not to keep bidding if you're paying too much for something. It takes a lot of courage. Good on them.
Thanks, Andrew.
Thanks, Andrew.
We loved having you back again, and we will continue to do that for our listeners so they can keep an eye on all parts of the market when it comes to land supply and all those types of things as well. So Ray White Special Projects, Andrew Burke, if you need help with anything on that side of things, look out for the guys over there. They're always very, very helpful. So thanks again, mate. Appreciate coming in and having a chat.
Fantastic.
Thank you once again to you all for joining us on the Brisbane Property Podcast. As always, if you have enjoyed this episode, please share with friends and family, especially those that may be wondering, what is going to happen in Brisbane real estate in the future. I think this episode provides some valuable insights to really help people understand where we're heading. If you would like to leave us a review, we would love for you to do so. Hit that subscribe button so you don't miss any future episodes. And we look forward to speaking with you again next week. Until then, bye for now.